Okay, I think we're ready to get started. Welcome everybody to another Learn It Live webinar. My name's Tom. As always, I'm joined by Tyra and Abella.
Hi everyone, and welcome to tonight's Pepperstone webinar on becoming a better trader and emotional control. A lot of things people struggle with, really, so we're going to try and pinpoint a lot of the aspects where we can try and help you become a better trader by really controlling your emotions and looking at some live examples in the market as well.
Yeah, so I think the best way to learn anything is, especially when it comes to emotional control, is learn a few stories of things that we've seen over our decade plus each of trading these markets. We've come across many people that have tried and not done so well, and obviously we've also come across some successes. So one thing is always true, and that is you are almost always your own worst enemy. And I'm sure many people that are joining tonight have gone through a struggle where maybe it's something to do with them risking too much or them just having a night where things weren't going right, and you can wake up the next morning really questioning why you made those decisions. So we'll talk about that tonight. To get started, we've always got our risk warning. It's important that everybody knows the information provided in tonight's video has been produced by a third party and does not reflect the opinion of Pepperstone. The information has been provided without any alteration or verification, and of course should be considered only general advice. So what are we going to be covering today? We're going to be taking a look at some key insights from us in terms of what our trading past is and the lessons that we've learned. We'll be looking at how to deal with trading burnout, a very real thing, especially for you scalpers out there. Many people, when you're scalping, spend a lot of time in front of the screens. So how do we deal with that burnout and keep it peak performance? And our top 5 tips to help recognize and control your emotional state. So that's got a lot to do with burnout as well. And then last of all, we're going to look at how to correctly identify several patterns and correctly analyze support and resistance areas. Now, the reason we want to go over that bit is because when you take a look at things like support and resistance, you can really learn a lot about psychology of the market. And remember, the psychology of the market is to take advantage of people like us, and for someone to win, someone usually loses. So when we understand our own emotional kind of problems and things that happen time and time again with us as humans, then we can see the traps. And that actually is probably what you're going to get the most out of tonight. It's not just your own emotional control, but also seeing how the market manipulates and takes advantage of somewhat volatile nature being humans. Tyron, you got anything else to say about that?
Yeah, no, look, it's a very common problem with a lot of traders, especially at the start of their journey. They do believe a lot of the hype that trading is easy, and then they can get disenchanted pretty quickly when they actually start getting in and amongst it, and that's when the emotions really start to kick in, where people try to regain losses really quickly, or turn $1,000 into 100,000 in a couple of weeks, which is what some people will tell you they can do online. So
Yes.
it really all does tie in. I think it's keeping your expectations in check and really understanding the limitations of the market are very, very important parts of how you can use your emotions to your advantage. So we'll try and cover off on a few of those things tonight.
I think a great one just to start with before we go into some of these lessons is the old adage where you hear somebody tell you about how great something's going in their life, and then they say it for a few weeks or a few months, and then all of a sudden they go quiet and they're not telling you how great everything's going anymore. And that is the same with wins in trading. So if you've taken a 3-month kind of winning streak, the market's been trending and all you've been doing is following the trend, and then all of a sudden the market becomes range bound and you start to have some losses, you'll notice those people go very quiet. And the real truth is you generally don't see their full trading profit or loss. They'll only tell you when they're doing well. So don't ever get disheartened when you hear somebody say, oh, I have a friend that made $1 million doing this, because look, it's possible they did that. But the question is, where are they in 2 years' time? And Ty, I mean, how many times do we hear it? We've had guys come through our doors and made $500,000 in, what was it, 24 hours, if I remember rightly.
Yeah. And they gave back it and a little bit more in the next 24 hours, which is a very, very common occurrence because people think they've beaten the market. But the truth is, they've got the direction right in a market that was going in their favor. But that's an unsustainable model. And Look, yeah, look, a lot of this was very true, especially during the crypto boom when
Oh yeah.
every man and his dog was talking about how much money they were making. Like you couldn't even go to the local cafe without hearing somebody talking about Bitcoin and how much money they've made. But
Remember
I'm
you on
tipping
that
you have,
ferry?
oh, it was crazy. But you haven't heard much of that, most recently, and that's because a lot of these people were fly-by-nighters and probably gave back a lot of what they made and probably then some. Mainly because they didn't have a strategy and they didn't have any self-control. So it's
Yeah.
really, emotional and psychological, trading ability actually matches trading skill probably one to one. So without the two of them combined, you're just not going to be a successful trader. And a lot of people don't give it the time that it deserves. So it's a really, really important aspect. So hopefully everybody here who is probably at the start of their trading journey will, really resonate with some of the things that we're going to talk about tonight.
And just quickly, I want to remind everybody, if you have questions, please feel free to ask them anytime during the webinar. Part of what tonight is about is teaching you guys, or hopefully you learn something from what we've gone through, and also what we know other people have gone through. So if you have questions about something that may not be working with your trading currently, or a question about maybe how to improve something, please ask it, and we'll try to get to those throughout the webinar tonight. So let's start with some key insights. One of the first ones would be trading fundamental news decisions. So the reason I want to bring this one up is it's a great example of emotional control issues. And I think it's something that harkens back to the GFC for Tyrone and I. And when we first started really trading heavily, and one of those things was interest rates. Boy, oh boy, did we think we could pick interest rates. And we were right the first time. And that's not always the best, because what ended up happening is we used strategy, which many people be familiar with, which was straddling the market. So we basically put a position, a limit order both sides, and then we would say, okay, if the news comes out, such a massive news decision, it's going to move in one direction really large. And during the GFC, arguably it did. I mean, the news, no one knew how to interpret the news, and it went off in one direction very, very quickly, and that's a success. But what that taught us to do badly was we had a very high expectation, didn't we, Ty?
Yeah, and that expectation, when people go to the well, they often go back. If you go somewhere and you're gonna get water, you're fully expected that you're gonna go back and get the same amount of water next time. And that's exactly what we did. But of course, the market isn't always that kind. And what a lot of people don't know about new straddling is that if you haven't got your entry points wide enough, you can actually get done on both sides. And a common occurrence in that sort of trading criteria, and we were victims of it as well, is that you're definitely generally trading a lot bigger amounts than you normally would be in your account. So you'll either make a good amount of money or you'll blow your account up, which is what a lot of people generally do. Like Thomas alluded to, though, if you do get it right a couple of times, you have that mindset that you think you've actually got a strategy, when in fact it's not a strategy at all. All it is basically going to the casino and picking red or black and having a series of blacks go in your favor. That's not what trading is about. We need to take the gambling element out of the trading psychology and really just pinpoint what we actually see rather than what we think is going to happen.
Okay, so one of the other ones, scalping system trading burnout. Another one that we've experienced. We first started where we thought, okay, we'll run shifts, and effectively what we tried to do was trade the market 24 hours a day. The thing with Forex is it does trade 24 hours a day, 5 and a bit days a week. So we had a lot of burnout from that. There was basically times where we would be sitting there during the Asian session, and back then it just didn't move that much, and we would try to find trades. So because we were in front of the charts for such a long period of time, we ended up overtrading. And that was probably one of the biggest problems that we had at the beginning. And I think it's probably one of the biggest problems that everybody has. We've trained thousands of people over the years, and we have noticed that most people overtrade. It's actually the trades that you don't take and that emotional control and that discipline that ends up making you successful. So it's not the trades so much you do take, it's the trades that you don't take because you recognize the risks. So it's very, very
so important. And I know a lot of people probably think, how can you possibly overtrade? Well, Thomas and I, when we first started, like we were literally taking shifts, and by the time the Asian session actually started, one of us had already traded for about 10 or 12 hours through the New York. I mean, we didn't even take a break through the New York Asian gap, which is like a 4 hour, basically black hole of nothing. But we were actually trading stochastic crosses up and down in those periods as well, which is absolute madness looking back on it. But yeah, it's something that a lot of beginning traders actually do gravitate to. So it's something you
Oh
really
yeah.
need to be mindful of. It's absolutely imperative that you don't find yourself over trading, especially at places where the market just is not moving.
So of course, another thing is risking too much of your available capital to make it big quickly. So look, we had just spoke about this with the crypto stuff and how everybody wanted to make a huge amount of money very, very quickly. Risking too much, it's just too easy in Forex. It's just too easy in most of trading. If you have access to 500 to 1 leverage, your general kind of concept, I guess, is to probably risk using at least a few hundred to one leverage. So if you have $1,000 account, most people trade one contract or 0.5 contracts, and that's just too much to start with. Trading doesn't go anywhere. Once you have your system and you know and you believe in it, you have many different strategies to be able to build your account. And actually, Tyron, I think maybe what we should do is post our link at the end of this webinar for everybody out there, which is our Presic account builder, because that shows you how you can start with a small account, have small successes, and as you have success, you can add to your account. So you can add extra balance. Maybe that comes from your job or that comes from your savings or wherever else. And then as you gain more and more and more success, you add more to that balance while that balance is building. And it's a huge compounding effect. So we all learn about compounding and the importance at our schools, but really compounding is the most powerful thing out there. You'd be surprised. Once you get past 10,000, you get to 100,000, all of a sudden it becomes incredibly real for people. And you need to make sure that you had that great base getting there where you did it the right way, so that if you were trading $100 million or you were trading one $10 account, it feels the same. And when you get there, you have the business plan. We talk about it all the time. Such a massive thing. Risking too much, obviously a huge error for most people, but it's because it's human nature to get there too quickly. It's our emotional control to say, I want to be here and then I want to be there next week. And sports stars are not born overnight. They train for years and years and years to get where they are, just like any professional does, and trading is no different. Unfortunately, becoming a rock star trader in 2 weeks is probably not going to happen for you. It's going to be months and months and months of hard work. And look, we've had people that have had success very, very quickly, but then we've also had people that have taken years in their journey to get to success.
Yeah, we can guarantee you that rockstar traders aren't born in a couple of weeks of successful trading. Anyone who probably calls themselves a rockstar trader is probably a fallacy in itself. But
I do remember the rockstar traders,
yeah,
yeah.
solid traders who have a consistent record, who who do it for a living, and who really can pinpoint strategies and stick to their plan, are the ones that are successful in the long run. They're not the ones that you're going to see boasting on YouTube channels or whatever it is that these young bucks do these days. It's basically most of the time the successful traders you'll actually never hear from. They're just going about minding their own business, but they're the true rockstar traders, because they're the ones that actually make a living from it, and a very healthy one at that, just following very simple rules and very simple strategies. Because the truth is, trading is not a very difficult proposition when you follow a plan and you have a solid strategy. It's all about the discipline to be able to execute that plan.
So let's talk a little bit about strategy. So some of you that might attend a few of our webinars may have seen this before, but we always talk about the top-down approach. And the reason we do this is because you really should be aware of what the biggest time frame traders are doing, even if you're scalping the market on a 5-minute time frame. So it's really great to start with the highest time frame you're looking at and then work down. And then you need to recognize the market conditions. So whether the market is trending or it's range bound, because that's going to bring in 2 different types of strategies, either your range bound market strategy or your trending strategy. And you really do need 2 types at least in trading, because if you can't recognize the type of market condition you're in, you may get into a lot of trouble. And I think, while speaking from experience, I do not remember looking at a monthly chart when I first started, or even a weekly chart. I mean, do you, Ty? I really don't.
I wasn't even sure they existed, to be honest. We were looking at the smallest. I mean, if you can believe it, we were looking at tick charts. So that
That's
just goes
almost
to
it.
show
That's all.
you.
I can't get over that where we did come from. But look, we were guys. We were once there. So, like a lot of people out there, we went through the really bad times to get to where we are now. But that taught us things. It also taught us where you do make the mistakes. So really, even if you're a 5 minute or 1 minute or 15-minute trader, start to look at the monthlies and break it down. We might do it together in a minute because I think you're going to get a lot out of that no matter what your trading approach is. Of course, also use line, bar, and candle charts, always important. Don't fall into the trap of just using one. Most people start on candles. I totally understand why, but do remember the line came before that. And line charts are used heavily in stock, and they really move into things like weekly and monthly kind of support resistance levels. And a lot of the biggest traders, the banks, they pay attention to those levels. So you don't really want to be shorting into support, even if you're on a 1 hour or 4 hour chart, if you're looking at a weekly, massively strong support. And then, of course, sticking to major currencies. I can't tell you guys how much people come undone by trading a currency that they think has a great trade on it, and it's maybe a Norwegian kroner, and they think it's a great trade, and they don't understand that it's got a different type of spread, and it also has a different type of daily movement, and they get into all sorts of trouble. So with emotional control, it's also about having the emotional control to keep your pairs down. So if you just stick to something like the major or the majors at the beginning, so US dollar pairs, yen pairs, that kind of thing, you actually have a lot more success because you'll start to learn how they work. And then as you grow your system and as you grow your account, you start spreading out to different things. So starting with the safe kind of approach is always best.
Definitely.
So
Now,
let's just have a
just
quick look
mentioning.
at, oh yeah,
Oh, sorry, I just
okay.
mentioned we were talking about the Pressing Account Builder. I've just posted a link that people can click on. It's our free account building your tutorial, really. So feel free to click on it. Everyone should be seeing it now, and you can, basically in your own time, have a look at how you can build your account from a small amount, very conservatively by adding funds, and how the power of compound works. So yeah, feel free to take a look at that because a lot of people have had a lot of success from it.
Yeah, and that's really the essence of emotional control as well, because managing your own money is the really tough part. I want to get to 1,000 to a million really quickly. Well, you have to build it and you have to do it off a good foundation. So let's just have a quick talk about horizontal support. And there is a reason to this because we want to go into the market and talk about support resistance and why I guess the markets take advantage of your emotional control using this. So horizontal support. Basically, support is where the market finds, so say it's selling off, the market finds support where buyers gain control and start pushing it up. So here we have multiple touches. We've got 1, 2, 3, and then on the fourth touch, of course, it bounces and we may be looking at buying it off this level. Here's an example of support in the market. You can see how it looks with candle chart. You can see how every time it comes down to this level, whatever the price may be, the sellers lose control and the buyers gain control. And that's a really important concept. So when we've learned something like support or we've learned resistance, which is just the opposite to that, what we should be then doing is I actually recommend for most people, if they can start on the 1 hour, 4 hour and daily charts, you're going to have generally a little bit more success and it's going to be easier on your lifestyle. Scalping's awesome, but it is time intensive. So if you are more of a worker and you're trying to get into this type of thing, maybe think about 4 hour daily charts. And you should still be able to find 3 to 5 great opportunities per week within the majors. And that's only with 10 to 20 trading pairs. And I mean good opportunities, not necessarily over trading opportunities. So always take a look at those timeframes. And if you haven't opened yourself up to them yet and you're on the 15-minute, 5-minute, maybe run them side by side. Take some trades, even in a demo or a small account using 4 hour daily analysis, and then take your trades on your scalping system and see which one has more success. Because many people find that the 4 hour daily they have more success on, and that's just the nature of who's trading behind it. The big guys are on that time frame, they're trading those time frames, and they push the market based on what they're seeing there, not necessarily what they're seeing on the 15-minute, which is where more of the algorithms and the robots are trading. So just quickly, horizontal resistance, the exact opposite of support. It's where basically the market hits a high level, and that high, the buyers lose control and the sellers gain control. So the sellers start selling off the market at this zone. So say this was the Australian dollar, say this was 80 cents, it's approaching 80 cents, and then each time it sells off that 80 cents, not only is that resistance, but it's also resistance at a very key psychological level. And that's important when you talk about emotional control, because if it happens at a key level, then usually that means that it's the psychology of the humans behind it, because we love those round numbers. And again, we'll get into that in a minute. Just before we jump into the charts, if you have a points-based system or some kind of system where you follow it time and time and time again, then your emotion control will be better in the market. So if you follow a business plan like structure, generally you will have more success. If you don't do that, then you won't really know whether your system's working or not, because you're constantly making up excuses for why something does or doesn't work.
The whole idea of trading successfully and building a strategy is really to have accountability, and I guess what you could also say, you could quantify what you're actually seeing. And by adding scores to the setups that you're seeing, you're able to quantify each component of the trade that you're setting up and being able to replicate it, which is the most important thing. Because at the end of the day, technical analysis is just history repeating itself. But yeah, you have to be able to, quantify what you're seeing and say, well, okay, this is what I have seen. Is this again coming up in the same manner? Are the same indicators showing me the same things? Is price action doing the same things? It's really, really important to focus on what you are seeing, but also to be able to say that has happened in the past. This is what is similar about it, and the outcome is generally the same. So that's why it's really, really important to be able to quantify it with a score. And a simple scoring system often does the trick, especially for people who are just starting out.
Okay, so let's just talk about the support and resistance kind of in the market. So one thing that always happens is you always see generally a breakout. So I'm just going to draw this here. This is the US dollar yen. I guess it's happening right now, or very close to right now, so might as well talk about it. And you can see this on a daily chart. So the US dollar yen had a tough time breaking past this 111 point. So you can see here 111.08, basically where the resistance was, and then it broke through and had this massive kind of nice big candle up all the way to, funnily enough, 112. Now, interesting thing about the US dollar yen, you can notice it really is loving the 00 zones. So that means every kind of 1 cent, it seems to be finding a little bit of support and resistance. So we'll just pull up these. There we go. All right, so you can see resistance here first at the 110, breaks through, goes to the 111, finds resistance there, breaks through, finds resistance at 112 and comes down. So it's like that reoccurring thing going on. But what ends up happening to a lot of traders is they see, let's say, a breakout here maybe, and they go, oh, I think it's going all the way up to this point. Now they might be right over the long term, but the problem is they get involved and they have like a fear of missing out. I think the term FOMO, as many people would know, or fear of missing out, is one of the big problems that traders have with their emotional control. They just go, I need to be in this, I need to be in this right now. So then they buy here, and then it looks good maybe for a little bit. They, of course, don't take profit because they're thinking, oh, it's going all the way up here. They don't analyze the market correctly. And then it comes down to maybe where they thought it might come down, which is this point here where the resistance becomes support. And then it does this little wick action where it wicks through, takes out their stop, takes out their order that they placed here, and then all of a sudden starts going back in the direction. And there's nothing more frustrating as a trader. So then as soon as it comes back up to this point here, then all of a sudden you buy it again, and then you place again a tight stop loss, and then it comes down and whips you again, and then you buy it again, and we've all been there. And how many times, even we did this, this is something we've learned from, and we couldn't bring ourselves to lose out on a trade because we thought, oh, it's going, we knew it was going to go, I totally knew this. You get involved here, and then it comes back down and tests the level that you wish you got in on.
That's exactly right. It happens a lot, and then all of a sudden you start to think that the market is against you, the brokers are trading against you, the world is against you. But the fact of the matter is that's just the way the market works, and you have to be prepared for it, and you have to have a bit of an understanding as to why the market does what it does. And again, it comes back to why systems work, because
Yeah.
you really start to learn where to put your entry point, your stop losses, and your take profits to work with the market rather than actually work against it.
So this is actually what you should expect from the market. The market should break through and then come back and retest these levels. In a normal market condition that's trading technically and not trading based on fundamentals, a series of higher highs and higher lows should happen where it breaks past the resistance point, comes back and it retests that level, breaks past, comes back, retests that level. Ideally, that's actually what you'd see. And that's because it is taking advantage of people on the smaller time frames getting involved with this trade with smaller stop losses than they should have, and then it takes all of those stop losses out, resets all of the indicators, because that's what's happening. All of the indicators like the stochastic and the RSI and everything that were overbought all become oversold, and then back we go to a new high. So when we start to understand the indicators and what they're doing, we start to understand the psychology of the market and also who's trading the market and the participants in that. We start to understand that we need to have the emotional self-control to say, okay, this is broken. If we don't get the price that we need and the risk reward that we need, then let's target the pullback. And when you start targeting those, you have a lot more success. I've got another example here, so I might as well bring that up because it really is so important. Okay, so this is one where we've been following a little bit in our private webinars that we run. And we've been talking about this pound Swiss. So it's a bit of a weird pair. Obviously, a lot of people don't trade the pound Swiss as much as they might trade others. We've been talking about the reasons why you might want to be involved with this trade. So we can see here, and I'll highlight this zone for everybody, that we've got this clear kind of resistance level, and it's always a zone. So one of the questions I think Christopher had was, do I draw support and resistance on touch points or on the open or the close of the bars? So what we like to do is we like to really see, well, if it's wicking into that zone or if it's closing into that zone, where are the most common kind of areas? So like an example over here is we see a wick here and then we see body closes here, but they're all at the same area. So it makes sense that this is going to be the support line that we're going to draw because that's the most clear version. You can see it comes across and that support becomes resistance because that's the good zone. And you really just draw it as a zone more than just a definite line. One of the things that Tyron and I used to do is we would try to pick the market like a scalpel. And Ty, I mean, how much we were sticklers, weren't we? We're talking to the pip.
And you just see so many trades just miss you by a little bit and do exactly what you expect them to do, and it just doesn't work.
What do we do after that?
And then your revenge trade, of course. You try to jump on a moving train. So
then we got the FOMO.
Then you get the FOMO, and that's exactly what happens. And it's so common. And I know it probably sounds so simple. People out there are probably thinking, well, how silly can you be? Like, it's a pretty straightforward process. If you miss it, you miss it, and if you don't. But believe me when I say, when you are actually in it and you are just starting out, you do feel like every trade is important, that you have to be on it. And even trying to pinpoint the market, like we said, not so much just on the entries, but also the exits as well. Like the amount of times you can be really stubborn on, you want what you want and you're not going to, budge on, you want a 50 pip take profit. And if it gets to 48 and it hits a massive resistance zone, you don't care. You want 50 and that's how it's going to be. Yeah, quite often. Yeah, we've got rules on how we deal with that, of course, but it's amazing how many times the market will get to within a couple of pips of where you want it to be, and then it will just completely reverse. And then the blame game starts again. Then all of a sudden it's the market's fault or the brokers are against us, and it's just what happens. But believe me when I say they're not against you. The market is the market, and you just have to work with it. And when you start to learn these little intricacies of what the market actually does, you'll be surprised at how much your trading will improve.
Yeah, nothing. Don't even want to say anything after that. It's very, very true. So we see the break here of this resistance, and then we see the market really shoot off. And this is a massive candle. Remember, this is pound Swiss, a lot of pips. And then it hits this kind of resistance or this point up here, and now it's started kind of coiling. Now the news in the pound, the fundamentals obviously are affecting this pair, because the pound is very volatile over the last couple of days based on the Brexit and all of those things. But what we do see still happening is the market is generally staying within this range, and it's really being bought pretty heavily off this key role reversal where the resistance becomes the support. So we can see it ducked under there, and then all of a sudden this massive bullish candle followed by a massive bearish candle followed by potentially another bullish movement. And of course, if we see a break above this, then we expect it maybe to move forward like we've done with the analysis and the double bottom and all these types of things, all the way up to this 136.9 level. And that's the kind of movement that you might see on a daily. But of course, the same principle applies to a 15-minute, 1 hour, or 4 hour. So when we have our emotional control in place, we can say, well, maybe it didn't make sense to maybe take it off this break for whatever reason. But when it comes back down and tests the role reversal, then the risk reward is going to be much better. We can place our stop loss in a really safe place. The reward is like a 2-to-1. So if we were risking $100, we might make $200. And that is going to be a lot more successful and also a lot better for your emotional state. You won't do that revenge trading and you won't make those poor decisions. So it's very, very cool to learn from something like this.
Definitely. And remember, guys, that it's not that important. I mean, look, scalping is a lot of fun, and it can be, a very fun activity when you've got the time to do it. But the truth is, if you want to be, a successful trader, a lot of the reason why people want to be traders in the first place is to actually free up their time. So, what you want to be doing is, living your life and actually, trading in the interim, spending only a few hours in front of the charts. The thing about scalping is it's a very time intensive thing, and you might only allocate a certain amount of time, but what you will find, especially early, is you will become addicted to it. And you might think that you're only going to spend an hour or two a day scalping. You might actually find yourself spending 6 or 7 hours of the day actually doing it. And the time that you spend in front of the screens, 6 or 7 hours in a row especially, can be really exemplified, because you're going to be concentrating very, very heavily on what's happening. And that's when you're going to fall into the trap of potentially over trading, trying to hit your targets a bit quicker, trying to make that certain amount of money that you might have set in your head that you want to make each day. That's when that's when the market really starts to work against you, because you're going to bring yourself undone just through sheer psychological deficiencies in spending too much time in front of the market.
Another classic case, just thought I'd bring it up because, again, it's about emotional control. Last week, we had a bit of a shock number in Australia. The Australian dollar really tanked. I guess it fell off pretty fast, right into this 70-cent support. And we had a lot of people contacting us right around here. No coincidence, right around, just as it was approaching the 70, it's going under 70 right now. I need to short it. That's actually what they said. And, well, we said, oh, look, wait till it's under 70, because until it's under 70, nothing's happened. There's no confirmation. But it's a great example of where if you were scalping it, expecting a full break through 70 and all the way down to 68 really quickly or something like that, then you'd be surely disappointed and not very, very happy with yourself, because it's bounced off that key psychological level. And now we're sitting at the point where it's definitely going to have some problems, and potentially now it'll break through. We'll see what happens. But by not waiting for the confirmation, we've really done ourselves a disservice. So this is something that most people fall into the trap of. They'll see the Aussie shorting, they'll read the news, they'll read the Bloomberg, the Reuters, all these different things, and they'll say everyone's really down on it. And it's no coincidence that when everyone's down on something, it often does the opposite. And then we call it like elevator talk. It's if someone's all talking about something, e.g. crypto, at that point, then generally, as soon as everyone's talking about an elevator, you don't want to be in that anymore, because that means that everyone knows about it and it's about to end. And it's,
in fact, you should be going the other way.
You should be right. You should be going the opposite.
The opposite way. That's right. And
And
when we talk about prices going through a support line or a resistance line, just so for the people who don't know, we mean that the candle has to actually close below it. Okay, so price just going through it and then completely reversing back is not a close below it. That's not something that we consider a break of a key zone. What you want to be seeing is a candle close below the resistance or support that we're talking about, and then we have confirmation of that break. Until we see that candle close, all it is noise or a potential fake out.
here's a great
Just like
example of a fake
a
out.
perfect example.
Yeah. So we want to see it close, and then ideally what we might want to do is test that role reversal. So anyone that's new out here that hasn't looked at role reversal yet, get your Google out, start searching it. However you want to learn about it is up to you, but it's such an important concept because it's the basic nature of human emotions and also human trading and taking advantage of different situations. So learn about role reversal. It's just so paramount to learn. I wish we learnt about it earlier. It's funny how we were just sitting on indicators and pivots and all of these other things, Ty, and then we didn't really look at supply, demand, or support resistance really for a while. It was very surprising now I look back on it, how long it took us to actually get involved with price action to a degree where we started understanding it and making sense of the markets. It's almost crazy, but that's how it was. So maybe somebody out there tonight knows what we're talking about. Maybe they're just sitting there with indicators all over the screen and really following those. It's best to try to understand what the market's doing from a psychology standpoint. So before we go into a couple of tips, I just want to bring up one of these. We'll actually be handing these out tomorrow. If anyone's interested in coming to one of our other webinars, you're welcome to do so. Tyrone might place that in the chat later. But these are things that you should look at. And there's plenty out there. I'm sure you can find one online as well. But we've just made this quick little technical analysis cheat sheet kind of thing that you can print and have near you. We find that a lot of this type of stuff helps with your emotional control. So if you have something like, let's say your system's based on charts and patterns, then having one of these printed next to you can be amazingly powerful, because just before you're about to make that mistake of clicking or doing something bad, you check out that chart and you go, oh yeah, I should be looking at those. Another one that I've had students do in the past was literally get $100 bill and they actually put it on top of their monitor, and that made them realize that basically they were trading real money. They weren't just trading numbers. And I can't believe it, but it's so true.
Again, it's the same as psychology. Like, I wonder, I mean, many people have been obviously to the casino, like you've probably been there, and you see people throwing around $100 chips like they're going out of fashion. But I wonder if these people were actually throwing down $100 bills on these tables, whether they'd be so quick to, lay down the double up or the double down, I should say. So it is actually a really important thing. But this cheat sheet's actually quite a large. It's a big A3 print that you can put on your wall, and it is a very, very handy device for people who are first starting out to really understand the patterns that we look for, most importantly, but also the stop losses and take profits and how they actually work. So yeah, for anybody who wants to get their hands on one of these, I'll post a link in the chat here, and you can just come to our webinar tomorrow night. Just register for our webinar, and where we do our live market analysis. So you'll probably learn a couple of tips and tricks on what's happening in the market anyway, and you'll be able to get one of these free. So just join us. I'll pop it in now.
Cool. And we should be doing a candle one as well. I'll probably try to get that together over the next couple of weeks. So that'll be good as well, because I think, look, everyone does candle analysis. One of the best things for confirmation, and patterns are pretty good too. We definitely love patterns. So these type of things, perfect. The money thing, surprisingly good. Even if you have a trading system, another great top tip would be print your trading system on a piece of paper, laminate that paper, and then just get a texter and just tick them off as you're making the decisions. That's a very rudimentary and basic kind of concept that really works. I mean, you'd be surprised. It holds you accountable to at least not making those fear of missing out style decisions. You look at your trading system on the desk and you go, damn, all right, can't do that, can I? I remember what it looked like last time. So whatever the way that you have is dealing with it, it's really important to put those systems in place while you're with the smaller money, because when you build up to millions of dollars, I mean, I find for us now, Ty, it's just not that intimidating trading large money anymore. But I can imagine, I remember when we first started, we thought that hundreds of thousands of dollars was a lot. And it's amazing how when you build a system, I mean, it wouldn't matter to us whether it's a million or 10 million or 100 million, really, would it, Ty?
No, because you have faith in your system. And at the end of the day, it doesn't matter whether you're trading $1,000 account or $1 million account. The risk is the risk, and your stop loss and take profits are going to be in the exact same spot. So,
Hmm.
well, and that's pretty standard. I mean, most people think, well, okay, you're risking maybe 1% of your account per trade. Fair enough. But the problem is, a lot of people fall over on the psychological standpoint that, rather than risking only $10 in $1,000 account, they're actually risking $10,000 in $1 million account. But you've really got to be mindful that that trade is exactly the same. So you have to be able to build up your account at a level in a smart way where you will find that your psychological fortitude will be able to adjust as your account increases. So as your account grows from 1,000 to 5,000 to 10,000 and so on, basically the trades that you're placing are exactly the same. You have faith in your system and nothing changes. The minute you start changing your trading style because you're getting scared of how much you stand to lose or potentially how much you've made, which is a common problem, believe it or not. People go into profit and they see a good dollar amount and they say, well, I've made $300 or $400 here. This is awesome. I'm going to take it early. When in
Oh, yeah.
fact that trade demanded a $1,200 take profit. What you're going to
Hmm.
find is you'll actually bring a really good system sometimes into you'll make it a bad system because it just simply won't work. Because really, the only way that systems do actually fulfill their potential is to allow them to actually fulfill their potential in the open market. So a take profit is a take profit and a stop loss is a stop loss. The minute you start interfering because the dollar is starting to get a little bit scary, you're either trading too heavily and outside your risk parameters, or you haven't got your psychological part right. So it's a really, really important because there's nothing worse than seeing a good trading system come undone by people interfering in their trades because they get driven by the dollar rather than the percent.
Here's just a chart I want to bring up quickly. Doesn't matter whether it's again 5 minute, 1 day, weekly, monthly kind of chart. That's why we don't have a timer on it. But you can see here the resistance and the support. The reason I want to bring this up for emotional control is you can see a great trap for the fear of missing out. So let's say this was a daily chart. These are all daily candles. Until the daily candle closes above this zone, we should not be looking at buy opportunities. So here is a great example of where the market pushes out, takes advantage of people believing it's a breakout, and then fully reverses, creates basically one of the strongest sell candle signals you can get, a shooting star, and then all of a sudden, bang, all the way back down to the support we go. So this is a classic example of emotional control in play. We, by understanding resistance, know that it needs to close above and close properly and actually finish the day above. It does not, and all of a sudden the trade completely switches. We have no bias. We're technical analysis traders. We start selling it, put our stop loss above the high here, and profit from the decrease in price. So just a great example of why emotional control and support resistance are almost the same kind of thing. You start to learn why you need to place those types of trades. So some great chart patterns to look at that are in, of course, that cheat sheet, things like double bottoms, ascending triangles, inverse head and shoulders, flags, all of these types of things you need to start to think about if you want to be a price action based trader. And if you want to trade trends and you want to trade reversals, I mean, double bottoms, perfect reversal patterns, really, really great to look at. I'll just bring up a really quick example because it's good to do so. We'll bring up the gold trade and we'll just quickly go over here. Oh, get rid of this MACD. So one thing that happened with gold is you'll see here that there was basically a really nice kind of zone where the market was stuck in a range, and then it broke through that range and then came back down and role reversal, overshot a bit, and then bang straight on with the kind of movement. So when you learn the patterns and you learn where consolidation does this and it creates a channel or a double bottom or something like that, notice how many times this consolidation is the end of the trend. Great example of consolidation here. Market starts channeling, breaks through. Here's the nice confirmation break, retests the role reversal, and then on we go with the trend. So if you're a let's say a scalper, you could look at the daily and say, well, my bias is towards the short scalps. And if you just take short scalps all the way through until you see the next consolidation, all of a sudden, a lot higher success. So top tip, look at the daily, guys. Start to pay attention to the trend on the daily. And then if you're trading the smaller time frames, get that bias based on where the big traders are and bring that into your trade. Amazing stuff. Just quickly grab back into the slides because I know we're kind of short on time. Just an example of a role reversal. Here's role reversal in the market. We've already been talking about that. This is kind of what it might look like if you're in a trend, which we talked about. So what I want to do before we end up, we want to talk about top 5 tips. So controlling your emotional state. So a separate trade account from your analysis account, one I recommend often to many people. If you are trading, let's say a decent balance, or you're finding that you're taking trades out early or anything like that, why not have 2 accounts? One account where you do the analysis and one account where you place the trades. Amazingly powerful because you don't see the dollar amount and you don't see the trade entry and how much you're up. So like Ty said before, you might be up $600 and go near enough is good enough, but that trade was meant to make $2,000, not $600. So very, very important to do that. I always recommend also starting to trade with a live account instead of a demo. Now, it may sound crazy again, but what if you opened a live account with $50 in it or $100 in it? The beauty of Forex is that you can risk incredibly small amounts of money, which you cannot do in the stock world. You cannot trade small amounts of money because the brokerage is a killer. It's too expensive. So you can start really small and then you start to learn how the real market acts. The problem with the demo is you might start with $1 million account, because that's what people do, or a $100,000 account, like what I did. And you start trading all sorts of pairs. And if things go bad, you close it and open a new one. It's what we all do, isn't it, Ty?
Absolutely. Yeah, no, it's very, very common.
So we also want to recognize cutoff points. Big one. We saw a guy who was an amazing trader one day lose his entire account. He did so because he lost control of his emotions one night, and he went on a monstrous losing spree with some seriously large contracts. So recognize your cutoff points. Like any good person at any job, if you get frustrated or angry or anything like that, then if you walk away from it and come back with cooler heads will prevail, generally you can come to an amicable kind of decision. And in this case, if you maybe set a losing of over 4% of your account in one night, you stop trading and you generally need to take a few days off. And that will help you reset, go to the gym, do whatever it helps you relax. And then you can get back into it and get started and start analyzing what went wrong. Another one, don't follow your gut feelings. Instead, stay true to your trading system. I think get the posters on your wall, do your trading system, maybe print it out or however you want to do it. If you're a member of our course, obviously you've got a trading system there, which you can just go back and put in all the things you're seeing and it will spit out a point-based system on whether you should be taking that trade or not. So that's really good to have. And as I said, print that learning material. So hopefully that makes sense to everybody.
It might sound a little bit simple, but realistically, visuals make a very, very big difference to actually pay attention and also not break rules. I know it sounds a little bit strange to put something on your wall and are you going to listen to it? But if it's staring you right in the face, you've basically got either myself or Thomas looking at you saying, should you really be doing this?
Yeah, that's exactly right. And that's what you need, because you need somebody, whether it be yourself in the past when you're in a quality emotional state, or you be us saying, this is bad, don't do it. You do need somebody to be telling you that. I just want to step 5. We've talked about these ones before, so that you can go and watch our old webinars on Pepperstone's YouTube if you're interested. But step 5, create a trading system based on multiple entry criteria. Don't just use one thing, and also be very aware of how, if you're using indicators, how indicators look. Often stochastic and RSI, they almost show the exact same information. So what ends up happening is if you say, I've got stochastic and RSI in my favor, well, yeah, you do, because they both agree with each other. So just be wary of that. And of course, create a business plan for your trading strategy. All right, I think we'll hand it over to some questions. If anyone's got a quick question and they're still hanging around, because I know we're a bit over time, ask it now, and we will try to answer maybe one or two. So we'll give about 30, 40 seconds.
Yeah, we've been answering them as we've gone, so we haven't got a lot of questions towards the end now. But like I said earlier in the link that I posted up, if anybody's interested in joining us on our live market webinar tomorrow night, just click on the link and register for free. And we will analyze the markets again. We spend a lot more time looking at the live markets and seeing if we can find some good trading opportunities. So yeah, feel free to join us and pick up that cheat sheet to put on your wall.
Yeah, I'll go back to the trading plan slide. There you go. Pretty sure this is the one you're talking about. That's not a problem. This is just an example. Now, this is actually not that bad. It's pretty decent. But just remember, the more reasons you have to be in a trade means the more traders that are in it. And contrary to popular belief, you actually want to be trading with the big banks. You don't want to be trading against them, because the way they enter the market is they actually have the problem of too much money. We don't have that as smaller traders. If you have $10 million, you don't have that problem. If you have $100 million in currency, you do not have that problem. But if you have billions of dollars to invest, you actually have an issue being able to place the orders, because someone needs to sell you those orders. So what ends up happening is you've got to place strategic zones where you add to your order. And that's why the market moves in the direction it does. And it has these role reversal points where it comes down and goes up, and it comes down, and it goes up, because people are putting in positions, then they're resetting all the indicators and all of those types of things, and they're scaling into their trades based on that. So that's why when it comes back to the role reversal period, all the big banks have said, okay, it's broken through, place my orders onto the next movement. Quite a few questions coming through. I'll just answer a quick few of them. Minimum amount one should start trading. So whatever's comfortable for you. I mean, I can't really give you that kind of advice, but just remember, you can trade as small as you want. So currency trading, you can trade micro lots. So just have a play around with the demo and see how small you can go. I think it's 0.01. Is that still the smallest, Ty? 0.01?
I think it is still, yeah. But look, I think probably to give you a bit of an idea as to how that would work, definitely jump in and do the Presky account building system, because that really shows you how you can build an account from $500 right up to $100,000. So it's probably it gives you a really good understanding on how you can actually scale up by starting with a pretty small amount of even as low as $500. So definitely check out that link.
Just a quick question about the points here that I've got on the screen, so 25 points. So what I'm saying is that we need a minimum of 75 points. It's just a made up system that we've made up. You can make it any point system you want. Maybe it can be 100 points. But basically, in essence, what it says is I need at least 3 of these reasons to get my 75 point minimum. So I need at least either a simple moving average cross, support resistance in my favor, and a candle confirmation. If I have those 3 things, I've reached 75 points. But if I only have one of these, or these, MACD, and a fib retracement, then I don't have 75 points. So yeah, it's just again, it creates it so that you can't break your own rules and you don't have that bad emotional control. One last one before I guess we go. Actually, we'll do 2. So I've got a question here just about drawing support and resistance lines. Can we use euro pound? I'll have a quick look at euro pound. Okay, all right. So if we have euro pound, generally what I like to do is I like to go line chart first, and I'll just draw some rudimentary kind of support resistance lines based on the key kind of levels, what we've seen recently as well. Then I'll jump into the daily, and this is usually where I switch it over to the candle. So this is where you start to do a little bit more of your finessing it. So what you can do here is you can see that the wicks have gone to this point, and you draw a bit of a range. So you generally draw a range of what you expect the market to maybe come back to. So here would be probably my range. it would be based on this candle here, and then it would also be based on the fact that the market kind of likes this little zone here. And once I've drawn that range, once it breaks through, this is absolutely a confirmation candle, okay? Absolutely, because it's broken through all of our zones over here, which we previously saw. Because remember, we don't see that at this point in time. Then the market's retraced and it's testing this zone. So when it gets into our zone, what we still want to do is we want to then break it down to a smaller time frame and start looking for confirmation potentially of the role reversal. So whether that's engulfing or it's a double top on the smaller time frame or whatever reason, that's what we want to be doing. But really, support resistance is all about zones. So say we're taking the top up here. I think it's very clear for people that are looking at this, let's go to the daily, that most of the bodies and wicks and everything like that have gone through this zone. Because we see a break here, I jump on the weekly quickly to see whether we did see any break, and we did not. And the importance of checking those different time frames is that we can then draw down to the bodies here, and we can say, if we saw a body close above this zone, that would, on a weekly, that would be incredibly significant because it has never happened before. So we're using that previous history to say to us, this is probably our zone we're looking at, but we need to see the weekly close above. So hopefully that makes some sense. But yeah, it's all about drawing zones and then highlighting those zones, and then those zones finding other reasons to be involved in it at that point, because you're never going to get it exact. So say down here, you're still going to want to draw a zone based on kind of what you've seen previously. So this is what we've seen previously. This is the zone we're going to draw, and then we're going to look for buy opportunities in this zone.
All right, guys. Well, thank you. Oh, you got another question?
Oh, that's all right. You answered it. All perfect. Okay, cool. Thank you very much, guys. We went way over time, but I think a lot of questions out there, so I'm glad we could answer some of those.
Thank you for hanging around and asking all of your questions, guys. Hopefully it has been a help. If there is there anything that you'd like to add or you'd like us to talk about in the future, let your Pepperstone account managers know, and they relay that information to us so we can, tailor these webinars to suit what you guys want to hear and what you want to see. So hopefully we'll see you tomorrow night at our webinar where we'll do a live market analysis, and definitely take a look at the Pressing Account Builder because it goes into a lot of what we've talked about tonight, and it can really help show you how you can build an account from a very small base and do it successfully without ruining your psychological mindset. So thanks again, and have a great night.
And one last thing, guys, make sure that if you are using MetaTrader 4, get involved and get Pepperstone to give you their advanced trading tools. These ones down here that I've got installed, really great stuff. They'll help you with your emotional control, especially the mini terminal and the ability to risk on a percentage or dollar-based amount. So get into that, some great stuff. Thanks, everybody.